This is episode 191 of the Andrew Hines Real Estate Investing Podcast. Welcome to episode 191 of the Andrew Hines Real Estate Investing Podcast. Today I have Dan McMullen on the show. Dan is a real estate investor in student rentals, specifically invested in the Peterborough area, and he's also a high school teacher. And today he came on the show to talk about how he's using infinite banking with his real estate investing. So infinite banking is a concept that's been thrown out to me a number of times. And I'm like, what's that? I didn't really know what it meant. I've talked to a few different people, had a few different people ask to be on the show to talk about it. And this was actually the second guest that's been doing it and talked about it on the show. And we sort of did a deep dive into the concept. And Dan was very helpful. He's a teacher by trade. So he shared his concepts and his wisdom and how he's making it work. He also shared case studies on his student rentals and how the numbers are looking and what he's looking for right now, why he likes that specific type of asset. And of course, how he's using his infinite banking to sort of be the bank. And basically what infinite banking is it's an opportunity to have a life insurance policy that you pay premiums into that you can actually borrow against because it has a cash value. That's a very simplified explanation. Dan explains it in further depth in this episode and how that's helping him make money in real estate. So rather than me explain it, let's jump into the episode and have Dan share his wisdom. Just before we do that, I just want to remind you to please take a moment to rate and review this podcast on Apple Podcasts. And if you're watching on YouTube, hit all the buttons just to help more people find it. Make sure you're subscribed. And without further ado, let's jump in to episode 191 with Dan McMullen. Hello and welcome to the Andrew Hines Real Estate Investing Podcast. I have Dan McMullen on the show, and we're going to talk real estate and infinite banking today. So we've talked about that once before, the infinite banking part. And first off, thanks for coming on.
Yeah, excited to be here. Fan of the show and excited to share with your listeners sort of what I'm up to.
Cool. Yeah. So Peter had connected us, I guess,
Yep.
or had maybe notified you about me. I'm not sure how that worked out, but Peter Lount, right? We're saying that right?
Lount,
Yeah.
I think
Lount?
it's Peter
Yeah.
Lount. Yes.
I never asked him how to pronounce it.
Yeah.
But, anyways, I was planning on getting him on the show as well, but so maybe we'll have that happen in the future as well. But do you mind just telling me a little bit about yourself as a real estate investor?
Sure.
And we'll go from there.
Yeah, I'm about 3 years into my real estate journey. I primarily invest in the Peterborough area, student rentals. I have a duplex up there as well. So I have created a team with my best friend and my brother. So three of us do it together. Highly recommend doing real estate. In my mind, trying to create kind of a power team. Yeah. It definitely takes the sort of the edge off of or the fear away from actually getting started. So I would definitely recommend for anyone who's interested in getting started, create a little power team and start together.
Okay.
So sort of that's what.
So you guys are kind of tackling it together.
We are tackling it together. Yes.
Yeah. Interesting. I wasn't sure what you meant by power team. A lot of people talk about their power team as, like their property manager and whatever. But I mean, there is something to be said with the multiple active partner joint venture. Yeah,
we each have our own skill set. So I'm sort of the people person within the real estate realm. Then we have my brother who's very hands-on. He's great kind of with the just the maintenance. And then best friend Ryan's really good working with municipalities, townships, and sort of that. So we each have our areas of expertise and we double down on that.
Okay, so I do a similar approach actually. I mean, I've been a solo investor a lot of the time, but like for instance with our campground, I'm not sure if you heard me talk about that. Yeah, we actually have 4 active partners.
Awesome.
And we're all doing something different. Yeah, we're all kind of handling a different side of the business, and it made sense for us in this case because we just see the future potential of income possibility. I think revenue possibility is well over $1 million. Once we're a few years in, and then things really get interesting. So.
I think you're going to do really well in that. Tobermory is a special place. I've spent many of my childhood summers camping up at Cypress Lake and really enjoyed that. So I think
nice.
It's going to be fantastic.
Yeah, well, we've been listed for about a month now. So as of the recording of this, we've been listed on Airbnb, and we've actually booked up pretty good for July is pretty full for all of our units, and minus like we're just bringing new units online, and those ones are available. But
word of mouth is going to spread too. People go up and they have a great experience, and hopefully that experience will easy promotion for you.
Yeah. It's fun. I've never had that kind of a business where, you know, you get like tagged on Instagram. You know, people are enjoying that part. So that's pretty cool to see that coming to life.
Yeah, I think in this day and age, people are seeking experiences. I think really that's you know, they want to try new things and new activities, and I think that's you definitely are onto something.
Cool. So tell me more about what you're doing. You said power team in Peterborough, and you've got how many now?
So specifically, we have 2 8-bedroom student rentals up in Peterborough, which are fantastic. We're looking to actually scale that, pick up. We want to do 1 a year, and we're very intentional with our investing with the student rentals. So we feel that we're doing sort of a higher end student rental. So we're buying nicer properties, and we are getting the best. We feel the best tenants. Yeah. So and we're renovating them in a certain way, and we're actually listing them in a certain time. So we like to buy between I would say June, July, August, September is when we like to do the buys, and then we renovate over the winter, and then we rent starting May 1st.
Yeah, that's probably a smarter way to do it than I used to do it, because I'd get people onto the 8 months starting September 1st and then expiring April 30th, which is, you know, it's better than not making income for those 8 months.
Right.
But if you buy it a little later, you can renovate over the winter when contractors are a little less busy. And that's a smart way of doing it.
And we also find, you know, students, we're renting to first year students going into second year. And we're getting the best students because they're like the keen ones. So we're actually renting it out in November is when we're doing tours. Yeah. And we're actually signing leases for May 1st. So, you know, the keen students are often looking early. Yeah. And they're often the ones we want to rent to.
Yeah. Sometimes I sign stuff as early as October. Right. Which I always like. You know, as a landlord, I thought that was way early. Like as a student, I waited until like February.
Well, that's it.
But you want the keen. I was not the keen student on rentals. We were like, okay, let's go find something. It's getting too late. Yeah. Whereas, there's others. They've got their group together. They're ready to go.
And we get the pick. So we can be very selective. So if we have tours and we're running 10 groups through our house, we get to hand pick who we want. I call all the parents. And you know, because I believe you're kind of renting out to these nice to the parents. So you have nice pictures.
If you're getting the right tenants, you are.
That's right.
You want the ones where the parents are sort of paying the ride.
100%.
Because these kids don't have any money.
No, like they're paying $725 a room. Like they don't have that. So
8 bedrooms at $725.
Yeah, we have so we break up the house. So some of the rooms.
Of 4?
Well, no, they're 8.
So it is a group of 8.
So we have some rooms are $675, some are $700, and then the premium rooms with the ensuite and the walk-in closets are $725. So we're doing very well on the cash flow piece.
And those rents have probably crept up over the last couple of years.
We've scaled them up. When we did our first one, our top end was $675, and then the one we just finished more recently, we pushed it. We pushed it up to $725 for the premium room. So, and some of the students were commenting, "Hey, this is a good deal," and we're like, "Okay, well."
Well, if you think about it in terms of the parents, like a lot of these parents are very well to do. Even if it was like $1,100, $1,200. How much different is that for them than $700? You know, I mean, it's not nothing, but for their kid.
And these parents have hopefully saved a long time for the university education, and we we're giving them a very safe, fantastic. Like we go through the whole. What's great about Peterborough is that they actually provide licenses for these large dwellings. So we can say to the parents, "Hey, this has been inspected by the fire department. It's got interconnected 3-in-1 smoke alarms." So they feel very good that they're getting a great product. And from the investors' end, I feel that I'm providing a great spot for these students to really enjoy their time.
And that was the angle I took. If you followed the podcast for a while, you'll know that was always my angle. I wanted to be the better student rental, the one people would tell their friends about. So you do have some that are ensuite bathrooms, some that aren't.
Correct.
Are these fully gutted renoed properties, or like partial, or just as needed?
No, they're very much. We've taken spaces and we've just created rooms. So we take an existing living room and a big living room, and we've created 2 rooms out of that living room. Or we take a big rec room basement. We put 2 extra bedrooms down there.
Okay.
So both our houses are 5-bedroom upstairs and 3-bedroom downstairs with 3 bath in the total house. And in the basement, we like to have like a kitchenette. You're not allowed to have another full kitchen, but they are allowing sort of a sink and countertops and whatnot, just to provide another spot where they can spread out in the house a little bit.
Okay, so how much living space is in these houses still?
So they're big homes. We actually have, so again, very intentional what we do. When we're looking for these places, we like to have a common area upstairs, a common area downstairs, and we have obviously a kitchen upstairs and then the kitchenette downstairs. So they can spread out. So we're fortunate enough that when we are looking, we can find houses that have this. So both of them are bungalows. Sort of
Like how many square feet would you have?
Yeah,
eight bedrooms in?
I would say they're between 22 and 2,500 square feet. So they're big.
Yeah,
yeah,
that's a decent amount of space.
And they're expensive. Like these are. We bought our first one 3 years ago. We feel we got a deal at 530, and we spent $37,000 in renovation.
So very little.
Yeah, and what was really cool about that one is we actually there was a large. We'll call it cavity in the garage. So actually what we did, the garage was 18-foot ceiling. So we actually put a room above the garage. So we blew out a door through the living room. We actually got an engineered beam across the garage and we put a bedroom in there. So
was it still a functional garage?
It's still a functional garage. So we still have 18-foot, we still have an 8-foot garage. Yeah.
Wow.
Yeah. So it was that was awesome. So that room cost us, I think it was about $14,000 to actually put in the house. And we've after 2 years, we paid it back already.
Oh yeah. That's a no brainer if you can get it in for that price.
Right.
Is there any restriction on the number of bedrooms by their municipality that you can have?
Yeah. So for the large dwelling unit for Peterborough, it's 6 to 10 bedrooms. They are allowing in there. So we have a license for that. So some people would think, who would ever want to live with 8 people? But we've had demand. And obviously the more people you can put in these houses, the better cash flow, right?
530 with 8 people living in it, paying on average, what, 600?
Yeah, that one, we've crept it up now. So it's probably between the first one is 675 to 700 per room. So we're north of like 5,000 gross rent.
Per month.
Yeah.
Yeah, that's like you're getting closer to 1% rule. Yeah, so that's obviously going to be good. Now, what do you have to provide in that market for the students? Are you doing utilities included?
Yeah, so it's
internet included.
It's all in. So we make it a one-stop shop. Parents like to hear that. So we say, you know what, we're charging you $725, but you're getting absolutely everything. Your kids are not worrying about anything. So we do snow removal, we do grass cutting, we do like the best internet you can have. So we're really, really taking care of them, and we do our own property management. Yeah. We just feel, and again, I can talk about my power team, Ryan and Jeff, like if we need to go up to Peterborough, it's like, hey, who can take this trip? So it breaks it up. Or, right now Ryan's on vacation up in Thunder Bay, and so I'm taking care of it. So
So how do you collect rent with them? Are they all sending you 80 transfers a month?
Yeah. So it's just 8 email transfers. Like your account looks very nice on July 1st, and off you go.
Once you scale that to like 20 properties times 8, then you're gonna like explode. Your head will explode.
It is a lot of work, and we do take it very seriously, but we do enjoy it because it's your own creation. We've taken this house and we've created it into a business.
It's fun to see it. Yeah. It's fun to see it come together.
Yeah.
And more importantly, like if you have a really nice product, to see like how like excited the kids get about it. Like if it stands out against everything else that's on the market there. That's really cool.
It's fun. When we're doing the tours, the students are running around with their phones and taking pictures, and they're FaceTiming their parent. Like it's fun to see them excited about that space. So you get a sense of pride in that respect.
Give me a bit of a sum up of what you look for locationally. Like what's a prime rental in that market? Like what's your ideal product?
Yeah, definitely. Bus-Route's really important.
So they all get bus passes with their tuition?
I'm not sure.
Or they buy a bus pass?
We look for those routes that are important. We want amenities, so we like to be central to grocery stores or just different places where they can walk to. I remember being a student, I needed to walk over to the grocery store or whatnot. So we look for that. we want nice neighborhoods, and we feel
so nice neighborhoods close to a bus path,
Yep.
a bus route, like 5-minute walk.
Yep, exactly. You know, you have to remember that these students are primarily they're there in the wintertime, so it's cold. So you want to make sure that they're not having to walk long distances or whatnot. So we don't. Some would say, "Oh, you need to be right next to university," and we would disagree with that. Like I think, and
You'll overpay for those properties.
for sure.
Yeah.
So we you know, a 10-minute bus ride, not a big deal. Close to amenities, perfect. So that's sort of what we're looking for.
Yeah, I like student rentals. I mean, I think that I've always traditionally thought that they were sort of recession proof. I wouldn't say perfectly, but I'd say the biggest concern these days is shutdowns. You know, if
pandemic proof. We never saw that one coming.
Yeah, I never saw that one coming. I'm like, what?
Yeah.
And you know what? It turned out pretty well for me overall. I didn't miss a payment.
Same with us. Like we did, a couple students ended up going home, but we were quickly able to replace
them. I left it on the students to replace them.
Yeah.
I'm like, yeah, you need to go. Just find somebody to take your place.
And
they do.
And even, you know, the students living at the house, we say, hey, we'll give you $500 if you find someone that you want to live with. And we've actually offered that.
Like if you had an empty bedroom?
Yeah. Say, you know what, you do the advertising, you find someone. And what we found with that is if it's their responsibility and they brought someone in, then they're not going to complain about.
Yeah, I've had Carlo on this show a few times, and he told me what he would do is he would actually not even advertise his properties anymore. He would just email out his current tenants and say, I'll just pay you to fill my other properties. Here's what I have available. Here's how much I'll pay you if your group that you recommend to me signs with me.
Yeah.
And like, I'm not advertising this property. And he'd have some that would just like snap up like 5 or 6 different referral fees. And they make like, I don't know, $1,000 a pop or whatever he gave them. So for him, did all the work, signed everything up. I think that's just, it's creative. It's pretty cool. I mean, I don't get it when people say like student rentals, oh, you don't want to do that. I'm like, I couldn't imagine an easier asset to manage.
I think it can go wrong if you're not intentional. So
you have to have your system set
up.
But if you do it right, I think it's a fantastic type of product.
It's been very seamless for us, and you can see where people go wrong when they maybe get the wrong tenants or they in the wrong neighborhood and they don't have it. So the nicer,
but if you're
like
you said, if you're not intentional, if you get like where I started, I had like a mediocre product that really wasn't ideal for students, and guess what? Like people had a paintball fight inside the house. Like you're going to attract bad tenants with a bad product. But if you have a great product, you attract good tenants. Like you said, you get to kind of pick the group. I don't really discern too much at a group of 8. Like if it's a mix, girls, guys, I mean, people will say maybe girls are cleaner, but I mean, you could be disproven on that. I feel like if you have a nice product, you will just attract a good one. And you call every parent more than I've done. If they're willing to sign the parental guarantor, I'm like, okay, we got our guarantors there.
Yeah, I just find, you know, if students, I want the parents to know what their kid is signing up for. A student. Like, you know, $725 is a lot of money, and it's you know, it's hey, do we all understand? Because we're building. You're in the relationship business when you're being a real estate investor and you're being a landlord, like you really are. So that transparency is very, very important. And you need the parents on board. Yeah.
Well, it's all people and people. So it definitely does not hurt to have that conversation. Yeah. The thing I would worry about and what I really tried to get away from because I was self-managing is I didn't want anyone, students or parents alike, making calls to me just because I have so much going on. Right. It ends up taking up a lot of time. And when the parent calls, and you know what, rightfully so, they want their kid to have a good time. It's like they assume that that's all I have on the go right now. Like, I just need to talk to you about Billy's problem. I'm like, sorry, which house is that again? Could you help me understand what's going on here? And it's not, I don't mean to make that sound like I wouldn't be willing to talk to them. It's just like, you got to have systems to kind of tackle that. So I wonder, as you scale and you guys get up to, if it is in your goals to get up to 5-10 properties, if you start getting more of those calls and it's like, whoa, we need to kind of create a layer of somebody who handles these calls.
That's a bridge I know I'm going to have to cross at some point in time. But I also don't want to create, you need to find that right person, right? In order to replace
to
you.
That.
And I think it's a good problem to have at some point in time.
Yeah, especially if you have like a VA or something. Like my VA will handle like tenant stuff that comes up. I'll be like, hey, call them, find out what's going on, fix it for them. Most of the problems are oh, we have a plumbing issue. Here's the plumber's number.
And a lot of it can just be done from your cell phone, right?
Yeah.
Like, we've had toilet problems. Okay, boom, you call the plumber.
Yeah.
You just arrange that. It's quick.
Yeah.
I know that having that power team is great. Is we divvy up which house we're responsible for what tenant. So we're fielding calls.
Sure.
And then we can do a WhatsApp group chat.
Do you get a lot of calls? Like, do you find that like you're getting a lot? I mean, you have 16 tenants between two houses.
Yeah, the nice thing, I would say no. And we're buying nice houses. Mm-hmm. So we're not buying beat down. Like these houses are.
So there's very few touches anyway.
Yeah, like they're very much move-in ready. During the renovation, we actually are forward thinking. Like with this last house, we know that the AC needs to be upgraded at some point in time because it's original. So we actually, we had an HVAC guy come in and he says, okay, you're going to need, while you're doing drywall, you're going to need new pipes because they're not to code. So we actually ran new.
Your coolant lines?
Right. Yeah. So we're trying to have as little impact as possible.
Okay. So it sounds like your student rentals are working well. What's the plan? Are you looking for more?
Yeah, we're actively looking right now.
Especially with the rates with the inventory sort of opening up, I guess.
Inventory opening up. There's a lot of fear out there. We're very confident in our abilities and sort of the cash flow that it can create. So we're actually seeing this as an opportunity and we're excited about it.
Well, let's run through some numbers on what a deal would look like today.
Sure.
So if you were to buy something, so what kind of price point are you looking in to get the 8-bedroom that you're looking for?
Yeah, I would say between $650. We'd be willing to pay $650 to $750 on an 8-bedroom. So that's kind of the purchase.
Okay, so let's say a worst case scenario, $750.
Yep.
Okay, and then what kind of renovations would you need to do?
Yeah, those costs have gone up. So I would say, let's say $50K.
That's still not very much.
Yeah.
That's still very, very okay. So you'd be in for about $800,000, and then you would potentially be having an average rent. So you're gonna have 8 bedrooms times what's the average rent?
Yeah, call it $700 now. We can do these are premium products. If we were on our next one, that would be our goal is $700.
Yeah, and you're providing like TV, couch, all that stuff in there.
We did in our first one, we did a couch and a TV. In our second one, we have not. It was bare bones, nothing.
And you still rented it for that price?
Unfurnished, absolutely.
Interesting.
Yeah.
Okay. Every market's a little different, what people get used to, right? Like if most landlords are offering it, they'll say, well, why aren't you? Yeah. Whereas in London, like most landlords didn't offer internet, so I didn't have to.
We feel like we have the best product in the city. Yeah. So we can.
That's great.
So we're like, well, this is if you want to find something else.
No, that's good. That's good though. Like I love it. Like that's always been my angle. Right. Whatever I own, I want to own like the best.
The best.
Which is actually a bit of a handcuff because you go a lot slower when you have that mindset.
Like scaling wise.
Yeah.
So there's another angle that we'll get to with the infinite banking on the scaling. So there's an intentionality on that. So we'll
jump into that and talk about how ways to make that not the case. You know, it doesn't have to go slow. I think, you know, especially like if you're only doing $50K in rental, that's not bad. Like normally when I'm thinking make it the best, like we're getting into some hefty renos,
right? And
it gets very expensive. So let's just work through these numbers. So 5,600 is what I'm getting based on 700 times 8 bedrooms. What would you be looking at for a property tax amount?
Yeah, Peterborough probably, let's just call it 5,000.
Okay, and then insurance being a student rental.
$250 a month.
$250 a month. $250. So that's $3,000 a year. Okay.
Yep.
So you're getting a good policy.
Yep.
Maintenance 5%.
Yep.
Put that in there. Yep. Utilities. What are you going to get to annually, or even monthly? Yeah.
So one is called everything $500, like water, heat.
Yeah.
Hydro.
Okay. So $6,000 a year. That's very reasonable. Yep. Management, you're doing it.
Correct.
So I'll just leave like 1% just for whatever.
Yep.
And then landscaping, snow removal.
So call it, so we're actually doing lawns ourselves. So when we pop up, but we're doing snow removal, we want to take the liability away in that respect. So I think it's about $800 a year.
Okay. $800 a year. Crazy. You guys are cutting your own lawns? You'll stop doing that once you get a couple more.
Power team, Ryan, my best buddy, he works in Peterborough. Yeah. So on his lunch hours, he
just go over
cuts the lawn.
Yeah. And I was going to ask you like what you guys all do. So that's interesting.
Yeah, we can.
Yeah, we'll get to that.
Yeah.
Okay, so $800 a year. It really wouldn't be much to get a kid to cut your grass for like $20 every.
So we had
every couple
that
weeks.
last year. We actually, and on one of my other properties, we do that. We just pay the neighbor.
Okay.
Yep.
So if you bought that for $750 and put in the $50, like, do you go and get it reappraised, or you don't do it as a BRRRR?
So not right now. Okay. So, and then it is certainly challenging. Like we're not going back and getting aid lenders. Being the student rentals, they're not.
You can go to
happy.
credit unions.
Exactly. So we're letting the equity sit there right now, and
Yeah.
we are going to pull some money when we need it for the next couple. So the one property's coming up in 2 years, and we'll sort of double down on that.
So you guys are going to be sort of like 25% down after your reno, something in that ballpark. 25-year AM with the credit union?
Correct. Well, we're 30 with, yes, correct. Yes, 25.
Okay. And then interest rate now, like what are you going to be looking at?
So we were locked in right now. What we're looking at?
Probably like 6% with the credit union?
Call it that. Sure.
Yeah.
We got better rates prior, but if you're doing it
with the way
right
things
now,
are changing, yeah, like you
Right.
don't know like where things could be at. So we'll have to see how it plays out. So right now this is showing about $150 in cash flow, which is good. I mean, our maintenance number at 5%, you probably, depending on what's been done,
Right.
you might not actually hit that. But then again, like 5% is $3,300 a year. I mean, you could repaint a place and pay that.
Yep.
So
Yep.
not that
Right.
we think it's going to be that bad because you're getting good tenants. But,
Yep.
okay, so these are the thing I like about this is that you're not having to do anything. You're not having to pay it. In terms of like a financial contribution, it sort of sustains itself.
Correct.
The big thing is the down payment,
Correct.
which you're coming up probably where the infinite banking comes up because that's where you're getting some of your money.
Yeah, these are substantial down payments that you're going to have to the money's going to have to sit there for a little while. So it's
Yeah.
not.
Mhm.
That's not ideal. Like the BRRRR is great because you can pull it right back and
Right, but even the
that
appraisers
money.
probably aren't going to say, hey, you've added all this value but maybe they will. If it's the one that understands student rentals, see, that's the thing. If you can kind of make chummy with some appraisers that are appraising for investors, they get that bedrooms equals money, money equals more value when you're applying a cap rate. Because you're almost a 6% cap rate on that. Like that's, historically, like if we were still back in like the 2.5% interest rates, like you'd be crushing the cash flow. You'd be like a couple $1,000.
Well, that's what our first property is right now. So we
a couple
are
$1,000 a month.
Yeah, like
Yeah.
we're locked in at 2.87.
Yeah.
So
with a credit union, or that was with the bank.
Was not.
Yeah.
Yes.
You can still get them through with the bank. It's just harder.
It was done earlier before the regulations changed. So it's
Cool.
It's certainly it'd be more challenging now to actually get that first mortgage, but it can be done.
You're saying with an A lender?
Yeah, we definitely A lenders don't want to rent to student rentals at this moment in time.
Well, okay. So as a general notion, yes, but in my experience, there are ways around that.
Right.
Like just knowing who within the A lender, because they know how to position it to the bank where it doesn't scream student rental.
Correct.
And then they can get it done. So the challenge that I've found in the past is they apply like CIBC, they have the stress test plus their own internal sort of stress test, what their debt coverage ratio. And they have all their predetermined amounts that they include for expenses. So by the time you factor all that in, I was getting like 65% loan to value.
Yeah.
So you can get your A rate, but you're getting like way restricted loan to value.
Exactly. Yeah.
So that's the part that's not fantastic. But you have strong cash flow in these, you would have better luck with them.
Correct.
Yeah.
Correct. So yes, we'll get into the infinite banking on how that how it really starts to get exciting.
Yeah.
So,
Yeah, just to clarify my previous point, I should correct myself because the challenge I had with CIBC was they were using market rents for family rentals.
Right.
So they don't care about your student rentals. So it's just going to further restrict your loan to value. That's the real problem. Even if you can beef up your rents, it's still going to have a problem. So the other option I did, RBC, I had around 65% as well.
Right.
But A rates. So if you can put down a little bit more, you can get those. Otherwise, you go with the credit union, take a hit on the cash flow. But you grow your business And you can do as many as you want with those
Right.
credit unions,
Yep.
right? Like they're not going to say don't have 20. As long as you can keep making the DCR work.
Right.
They'll
And there's
do it.
always a way, like having that investor mindset. It's
Yeah.
like, okay, you're going to say no. Well, I'm going to go find someone that's going to say yes.
Exactly. Do you just give up? Like, I mean, the people who buy a lot of student rentals, eventually they switch over to a commercial or a credit union approach. You can't just stick with the A banks. A banks are where you start, but that's kind of like trading wheels. Eventually you move on and you get into other types of lenders. You have to.
Yeah. Again,
It's the how can I. Yeah.
right.
Yeah.
It's, or the who, not how, Dan Sullivan's book.
Sure. Yeah, exactly. Yeah. Who do I need here?
Yeah.
Yeah. I mean, just the big mindset. A lot of people are say I can't versus how can I? And I have to tell myself this too, right? I mean, sometimes we look at something and, if we're emotional about it, we might not look at it the right way.
And you get frustrated because you're saying, well, why can't I do this? It doesn't make sense.
Well, that's a bad
you're
question
not
to
like,
ask. Yeah. Why does this always happen to me? Well, you ask and you'll receive the
Correct.
answer. So, I like getting into these type of conversations because it is important. Like mindset as an investor is everything. Otherwise, you won't really grow. You'll hit a plateau and you'll stop.
And that's the first, I think that, it's the first step. Like everyone talks mindset, but it really is. It's saying, okay, I'm going to be an action taker and a doer as opposed to just sitting on the sideline and watching.
Yeah.
Right. So I
for
kind of
sure.
have my daily mantra is, what am I doing today to make myself better tomorrow? And am I taking action today to make myself better tomorrow? What
That's
action
important
have I
because
taken?
the micro, matters. Every day matters.
Yeah.
I've actually been thinking about this before because a long time ago I had like a weekly schedule where I would have set time blocks for everything from working on my business to working in my business. Like, what am I going to do like in this time period? And I want to recreate that for my life now with everything I do now. Like, what are all the elements that have to go into every week? And just give myself set time blocks where I throw my phone away and just crush out. I need administrative for an hour and I'm doing nothing else. I need to get back to that because I got so much going on.
I like that because it's being very intentional, right?
Yeah, about your time. Yeah.
You're just, and I'm a family guy, and congratulations, you're a new father as well. And what you're going to experience is you're going to need to carve out that family time as well, right?
Yeah.
So you're being very intentional with your kids, and
This
with
is
your
work
wife,
time.
and
This
with
is
his
family time.
work, and because it can get all jumbled up, and you can get kind of carried away.
Yeah, that's definitely it. Like I can say like the main challenge is like every moment he's awake, like we have a nanny in most days. And that literally just keeps us at our baseline where we would be before the kid during the day. Like the house doesn't get totally destroyed. It allows me to leave the house so my wife doesn't like have a mental breakdown that she isn't doing it alone.
For sure, yeah.
And, and the whole time he's awake, we're kind of doing stuff with him.
For sure.
And it's not until he goes to bed that I have like 3 hours at night from 7 till 10 in an ideal instance where I can do some stuff and I'll get caught up on things. So yeah, you're right. Like you really do need to figure out your time. Like people who don't have kids don't realize how much time they have.
Everything else kind of goes to the wayside, and one thing you definitely learn as a parent is they force you to learn this is you have to you have to change your expectations because you think a lunch is going to go to a certain way or bedtime's going to be a certain thing, and it all goes
Every day is
awry.
different. Every day is different. How many kids do you have?
I got 3.
3.
Yeah,
Oh,
3.
okay.
3 under 10. So it's definitely busy, but it's
I always say this. I don't know how you got to the second one, like after the first one.
No, you'll get there. It's fantastic. But circling back on the intentionality, little by little becomes a lot. So it's just those little increment things every day that you just need to do. And whether that's like your business or your health or your exercising or family or whatever, right?
Yeah, because any of us can do this. Like what are the things that have to be in every week? Like if you kind of envision, like you start with your goals and then your ideal lifestyle, what that looks like, then you're going to probably determine that every week includes a certain amount of time for cooking, going to the gym, working on your business, posting on social media to grow your business, reaching out to your investors, to connect with them, to build those relationships. Those are all important things that don't pay off maybe that day, but they're contribute to the overall quality of life.
And that's it. They say the life that you're living right now in this moment is just a collection of decisions and actions that you made
last like 16 months or something, whatever they say,
years ago. And if you look at your health, the donut you eat today is not going to have any impact today, but if you eat a donut every day for the next,
it compounds.
It compounds, and that's same when it comes to your money, and your health and your relationships.
Compounding decisions,
So
like the people, the top performers, like I'll generally ask people who come on this podcast, like, what does your average day look like? And not everybody has that like sectioned up schedule like that, but they'll describe a routine. Well, normally this is what I do in the morning, and you'll see those consistent elements there that people have that consistent success. Is like they have certain things that they do that are with consistency.
Funny that you say that. Here's an analogy. I'm a teacher by trade, and there's a reason that A students get A marks and B students get B marks and C students get C marks. There's also a reason why people make $500,000 a year. There's reasons why people make $250,000, and there's reasons why people make $50,000. Because everything has a system. So if you are trading your time for money and making $50,000 a year, well, that's like you're doing that and you're trading your time for money. But if you are scaling up and you are getting your money working for you faster, well, there's a system for that. So it's that was one thing, sort of my why on why I'm doing this is, okay, am I doing the right systems in order to sort of scale my life in the way that I want it? So
those are important questions to ask.
For sure.
Just like spend some time. Like I used to love my mornings. I was doing the what was it called? The Miracle Morning for a little while there. Getting up at like 4 a.m. and journaling and stuff. That's a great time where you just have no distractions. You just journal out your thoughts and digging into the thoughts of like how you want things to be. That will dictate the decisions you make. If you're thinking about how you want things to be, you create your reality.
Because your mind is focusing on those goals for the day. So if you're thinking to myself, okay, I need to make this many phone calls, I need to reach out to this person, I need to do that, then your mind starts creating a map.
Yeah, exactly. Like this is my goal. Right. Here's how that breaks down onto a monthly. Here's that on a weekly and a daily. Okay, so here's what I need to do today to make that happen for this year, for this next year. Yeah.
And people talk, it's so, what's the word I'm looking for? Cliche to talk about goal setting, but it is real. Like it is so important on a daily, monthly, yearly to have those goals, and because your brain really starts to connect with how am I going to get there?
Yeah. Well, it's kind of like deductive reasoning. Well, if I want this, then what do I need to do now? Like, well, clearly I can't just sit around and eat potato chips all day. I'm going to have to do something.
And what's the plan in order to do that? So
exactly.
And how? It's called backwards design. So starting with the end in mind and working way back.
Yeah. So with that being said, what do you do on a daily basis for work?
Yeah. So I'm a high school phys ed teacher. Okay. So I'm 17 years into that career. So it's really, I really enjoy my job. I'm certainly with my journey as far as the real estate and the investing side, it's definitely carrying over to what I talk about on a daily basis in the classroom. So I am talking a lot about intentionality, lifestyle design. And it's certainly, I'm sort of reinvigorating myself and getting excited about talking about designing life in a certain way and sharing that with the students. Yeah,
it would be hard not to, like if I were teaching in a school, like hard not to talk about like real estate and how you can, don't just think typical careers, like don't just think a job, think about how you want your life to be.
It's amazing talking with the students as far as the generational programming. So we're all programmed from our parents. We learn a lot of how our parents navigate the world. So we tend to navigate the world in the same way, unless you become conscious of that.
Right.
So, and I watch the students do the same thing. The students are always saying, well, my parents want me to be a doctor or a lawyer. And I say, okay.
Do you notice that every high school kid wants to be a doctor, a lawyer, or what's the other one? It's your doctor or a lawyer, big two.
And quite often that's their parents talking.
Yeah.
Saying, okay, you need to go to university, you need to do this. And they're being programmed and saying, okay, well, what about, is there something that you would like to do? And being intentional with that.
I don't know. Would they fire me if I told them that they should not think about going to post-secondary? You should just go right into business.
Well, that's certainly a trend. And I think the students the social media is definitely promoting the fact that maybe you don't need to spend $100K on this.
That's one of the things that I thought, could potentially happen for student rentals. And it never occurred to me early on, but it did occur to me that there could be a social shift away from post-secondary when people start to realize that, hey, the jobs actually kind of suck at the end of the post-secondary, unless you're doing something like a professional job. But I mean, there are people that are moving into Toronto that can't even pay their rent with what they're making to start.
It is a real problem, and definitely And speaking of the student rental on the investor side, you need to have an exit plan in case that was to ever happen. So we think about that with our homes, saying, okay, if that dries up, which I don't think is, I think this is going to be a generational, like this might be my kids change that. Like these institutions, to be a teacher, you need to go to post-secondary school, to be a doctor, to be
right. That's so they're change. Making so that. Those paths are still going to need it.
Absolutely.
And that's what I liked about like Western, had engineering. You're still going to need engineers. You're still going to need lawyers, doctors, dentistry. All those schools existed there. So like I felt a certain level of comfort, but it still could, decrease enrollment. The thing I thought was the bigger risk was lockdowns. Those were like, if you have a couple of years of that, you're now going to have like a big softening of people just saying, you know what, we'll just do it online. We're just going to stay at home. And not that I don't think that's an easy decision, because kids want to go to school. They want to be with their friends and they want that experience. So conflicting factors for sure. Mm-hmm. The big thing I think with student rental, if I was just to start from scratch again, I would keep more in mind how I would pivot to a family rental better, because mine were very purpose built, like very, very specifically. It would be a little weird for a family, just a bit. So I would have probably done bigger living rooms and like kind of like set things up. So, hey, we have en suites in all the bedrooms, but who cares? We don't need them, but we got everything else we need.
Yeah, and as long as it's certainly if you have that shell of a house and they're in great areas, and that's what I really think is important, is when you are buying those really great areas to have that exit plan.
Yeah. Absolutely. Buy great areas. And I mean, in your case, you might blow out a couple of walls if you're transitioning back to a family rental, but it wouldn't be a huge renter to put it back the way you would want it.
And that's what we're thinking. Yeah. We can easily transfer it back.
Yeah. Very cool. Okay. Dan, are you located like this area? Like where do you live?
Yeah. Whitby. So Whitby. Durham area.
Oh, okay.
Whitby.
So you did a drive to get here today.
Yeah. So no problem. Right across the 401, no traffic at all. Good to go.
Oh, okay. Glad to hear.
Yeah.
All right. So, Dan, tell me about how the infinite banking concept is involved here. I guess that's not what you do for a living, but Peter is somebody you worked with on this.
Exactly. Yeah. So the infinite banking concept, Nelson Nash is the author of a book called Becoming Your Own Banker. And that's kind of the ground zero of where you need to go if you're interested in implementing this concept.
Yeah. But very simple as a concept, can you tell, like I'm in kindergarten?
I'm creating a family bank. I'm creating a master account. And how I'm doing that is we're using mutually owned, dividend paying, whole life insurance. So what that is these are life insurance policies that I would get on myself,
they have
on
cash
my
value,
wife.
Right?
They have cash value.
Yeah, okay.
And they're dividend paying. So there are annual premiums we have to put in, and they uninterrupted compounding interest for the entirety of these policies.
Yeah. So the dividend they pay goes back into the fund?
Correct. It circles back into the fund.
Yeah.
And
okay. And then what you're able to do, because they have cash value, is borrow against them.
I can take a collateralized loan against that, which is very beneficial because I can then pivot and deploy that money into investments.
Right. Okay. So could you, which institution would you have your policy with?
Yeah, I believe Equitable Life is the institution. The brokerage is called Ascendant Financial. So Ascendant Financial is a company in Canada here. Okay. Jason Lowe is the CEO of that. And so they're the ones who actually set up the policies with a life insurance company. Yeah. And then I have Peter Lount, who is my coach and mentor, working through this process with me.
Okay. Awesome. And what lender would lend these collateralized loans to you?
Oh, so actually the life insurance company.
They do it.
Yeah, it's so easy. So I have, they have so these policies they get underwritten, they get fired up, they get going, and then you're given a password and a sign in. So I can go in and I can see, it's just like a bank. I can see all of my information all there. I can see how much my policies are worth. I can see the loan availability. I can see the loan amount that I've taken out. So it is all there. And if I want to take a loan, a policy loan, I simply fill out a piece of paper, I PDF shot it, I send an email, and literally within 48 hours, funds are transferred into my account. Nice. It's beautiful in the sense that it takes all the red tape out. I don't
Yeah.
need to be approved because the money is
Is there a
already there.
qualification though? They want to, like, they run your GDS, TDS, like for a mortgage or any other loan?
Nothing.
No.
No, because they have, so
it's just based on collateral.
it's collateral. They
It
have,
doesn't matter that you have the income.
So yeah, so exactly. So let's say I take a policy loan, and something unfortunately happens to me and I pass away. Whatever the loan amount outstanding, they would take
Just liquidate.
well, they would take it off my death benefit.
Yeah.
So instead of being paid out, say $3 million, I'd be paid whatever the amount is minus. So 3 million minus whatever 50,000 that I have,
Yeah.
or whatever. So they're getting their money.
Yeah.
So it makes sense to them because they don't have to pay out the same amount.
Right.
So what's so beautiful is I can
Yeah.
have life insurance, but I also can use the money while I'm still living.
Invested. Yeah. So what's your mutual fund policy earning compared to like what you're paying on the interest?
Yeah. So let's say I'm making a dividend of 5% a year.
Yeah.
And then let's say if I want to take a loan, let's just call it the loan might be 7%.
Yeah.
There's a lot of people that get hung up on saying, well, you know,
pay 7%.
that doesn't, what I can go to a bank and I can get 2.5 or whatnot.
Yeah.
But it's the whole mind shift of I own, it's a mutually owned. So I own part of, I know it's a very small amount, but this is my company. So these policies are kind of like starting my own business.
Yeah.
So we have 10 policies within my family right now. So I have them on my kids as well. And we'll talk about how.
So basically this benefits the fund. When you borrow money, that money is going back into the fund. You're going to pay management fees to the people administering it, but yeah.
Exactly. So we're keeping it all in-house in that respect. And what's also beautiful is I don't have to pay it back in a year. I can pay it back whenever I want. So it's unstructured loan. So I do want to pay it back because I want to keep my policies full in order to deploy money in the future. So I will make.
So you can
loans.
recycle the capital. You pay it back, then use it again on the next time you have a deal.
Exactly. So circling back on the student rentals, I see the gross income as the thing I really like because let's say I'm bringing in a fresh $5,000 every month. Well, I can. Let's say I was to take a policy loan or I need to pay a premium. I have that fresh money, that flow coming at me. And that's what banks are so good at. Banks are good at money flow. So, and if you look at why banks make so much money is because they get their hands on your money first. Like when I get paid, the first spot that money goes to when I get paid as a teacher, it goes right to the bank. So the bank now controls my money right away. So my mind shift is thinking, I need to think like a bank. So I'm trying to create a bank, and the vehicle which I'm trying to create bank just happens to be these life insurance policies.
Yeah, it's an interesting concept. Yeah, you're right in the middle of the money. I think the big thing is that you can keep this money working, grow your life insurance policy. I think there's a lot of people out there that probably want to have that. Like that's the one extra thing that they've got in there.
I have 3 kids. It's a layer. I like
wealth
to have.
protection.
Yep.
Yeah. And then you have this ability to just still utilize those funds, not because they're obviously not earning as much as real estate investors get. But now you can pull the funds out at 7%. Does that report to your credit bureau?
It does not.
Oh, see, that's even better. So you don't have to say anything. So it's like it never happened to the bank.
And it's not. There's no tax issue as well because it's a loan. That's a loan.
It's not
it doesn't trigger that. And then when when I pass away, it's not going to trigger taxes either because it's life insurance. Yeah. So it's tax-free.
Yeah, that's the big benefit. I've heard actuaries speak about this many years ago, probably before the infinite banking concept really was a thing. Because that's only more recently that I've heard that thrown around.
It's definitely gained popularity of late. Absolutely, it's been around for a long time. There's been a lot of people who've been practicing it for a long time, but it's starting to. I think social media has been a big piece on that and gaining the limelight. And there's a lot of people who are very, very hesitant. Like I would have been very hesitant if I didn't build a relationship with Peter Lount. Because if you don't structure these life insurance policies properly to be an infinite banking, then it's not set up right. Then
it won't have the proper cash value to borrow against.
It doesn't grow properly. Yeah. So I wouldn't be able to, as an investor, I wouldn't be able to take a collateralized loan and have that money working for me.
I think one of the best things you've said is that it doesn't report to your credit. Like that's like, okay, that really makes a huge difference because now you can build that fund. But you also have access to it. It's not going to affect your ability to borrow from the banks. And at 7%, it's not that much different from the rates people are paying on their mortgages right now. So
yeah, and there's so many advantages in that respect, which are great.
So your big opportunity here then is just the ability to move quickly. You have funds that you can draw against anytime you want. 48 hours, you got the money. In the meantime, it's earning you money.
Correct. Yeah, I don't have to go through the red tape as far as, hey, can I get a loan? Can I refinance? Like refinancings are taking months now in order to refinance with the bank.
So that 7% that you are paying is that going to the whole fund, or is that going to specifically your portion? So your cash value is being grown at 7% when you're borrowing against it.
So the whole fund, like as in like the life insurance policies fund, or my own policy?
Yeah, the whole life insurance, like their mutual fund, or is it just going straight to your policy? Is your policy just growing by 7% on whatever you borrowed?
The money that they're individual, they're individual entities.
So your individual entity is basically collecting 7% less management fees when you borrow against it?
Well, I would when I borrow against my policy.
Yeah.
That would be money that the life insurance would be making.
Yeah.
So they would then pay that out in a dividend of 5%. So they're creating their dividend based upon.
Yeah. Okay. Yeah, so the company makes that money and then they give you the 5%.
Exactly.
So the spread is basically there.
Exactly. And the life insurance, they spread their investments out. So they're loaning money and they're investing in real estate. They're investing in
so it's not just the infinite banking that they're investing in.
Correct.
Like they're not just lending out money. Yeah.
And in fact, these life insurance, they don't care that it's called the infinite banking. They don't see it as that. They're just providing the whole life insurance. So the
infinite banking is the concept.
It's a concept. They don't advertise it.
They don't call it that. No, this is just a concept.
Correct.
Yeah. Okay, yeah. So I had so many people reach out to me like, hey, you should have infinite banking on. And I'm like, okay, well, then I finally talked to Peter about it. I had people actually offer to pay me to come on the show to talk about this. I'm like, okay, well, there's obviously something going on there. I would rather have somebody like you who just did it.
Independent.
Come on, independent, not selling it. Just talk about it. And so that's cool. So what do you, like beyond what we've discussed, are there any other benefits that you kind of see like, from a simple approach that it's going to do for you, or is that it's the flexibility?
It's control.
Yeah.
I get to grow my family banking system at my own rate, and I get to take control into my own life. There's so many things in this world right now, as you know, like are out of our control. So if I can't. It was interesting talking about lockdowns. Like as a teacher, I wasn't sure if. When they sent us home originally in March 2020, I don't know if they were going to continue to pay us. They did, which was fantastic. But it was a real turning point where it's like, okay, I need to start looking at different vehicles to ensure in my life that I'm going to have wealth for my family. Yeah. So real estate investing, the infinite banking, like I started to really research these different vehicles that can add security to my life. So that's where the pressure point really hit.
Okay. Yeah, that makes a lot of sense. I've said this before, but I don't think there's anything more risky than only having one source of income.
100%.
You cannot do that. Like if your job is your only source of income, then all it takes is the boss to not like you or to give you an ultimatum, and it's choose between feeding your family or going against your integrity or your beliefs, right? So I think it's really, really important that people diversify, and that real estate's a big thing there. Sounds like infinite banking could be a component, and then start businesses, do things, be an entrepreneur. Because back in the day, like 150 years ago, people weren't employees. Like everybody, like you had your shoe repairman, you had your blacksmith. Everybody had a trade that they were in. They all just did something. They were self-employed. This concept of working jobs and careers is much more modern historically.
And I think it's very important as people. I think it's only a natural progression as we grow as individuals. Like let's say I'm a teacher, for example, and the traditional length of a career is 30 years. That's a long time. Well, what happens if I start to I get interested in other things after year 17 or 20? Yeah. I see so many people. Unfortunately, and this doesn't even have to be teaching, it can be whatever, but if they are promised a pension at the end, that they're hanging on to at a job that say they don't like for the last 10 years
Yeah.
because they're trying to get that pension.
They want to get to their pension date. Oh, when I hear people say that, I'm like, you don't get these years back.
It's sad.
Yeah.
I feel for them because they're and you can see that they're going to work every day
Yeah.
and their heads are down and they're not happy.
Yeah.
And I feel we could solve a lot of problems with people's mental health if they were fired up and excited about getting up every morning and doing what they love to do.
Well, work because you love it. Work a job that you love and do that because you love it. I mean, we have enough resources, enough people who've come on this podcast who've created wealth to the point where they don't even need to work and they're in their like 20s. There are ways. So this is the type of things like we need to be teaching our kids.
And that's where I am starting to talk about with my students, is saying, okay, let's explore this. And I teach substance abuse and mental health within the grade 9 curriculum. And we talk about, I scale it back and we talk about, okay, what is happiness and what is creating a life of fulfillment and how does that look? And I feel like that's a real base layer that we need to get back to.
Nice. Okay, Dan, been fun talking to you. Is there anything you would want to share with people before we wrap up?
Just my biggest message, I guess, is be intentional with your life. Really try and be better today than you were yesterday, and start looking at how can you do that. So whether that's your health, your wealth, your relationships, be intentional. Little by little becomes a lot. I love that expression. I'm stealing it from Sean Croxton, who has a podcast called The Quote of the Day, which I listen to. I'll give him a shout out on that. Okay. And he really talks about little by little becomes a lot. Start somewhere and trying to improve your life and just keep at it.
Yeah. It compounds, right? Yeah. Cool. And where do people find you, reach you?
Yep. So I'm actually starting really quick. I'm starting a mastermind that we meet once a month. We bring guests on, and it's called Dan at cashflowcrew.ca. And it's just a Zoom call, and we bring different people who have different areas of interest, whether that's real estate, crypto, stock hacking. I've done some option trading.
Yeah, so
I did Irwin's Wealth Academy there, which was fantastic. So I'm active involved in that. And then I've started an Instagram page called Dan McMullen Lifestyles. So you can follow me on that.
Dan McMullen Lifestyles, and then Cashflow Crew.
Dan at cashflowcrew.ca.
That's the email?
That's the email.
Okay.
Yeah. So I sent actually to...
okay, so Jane has got all that.
Correct.
Okay, we'll put that in the show notes so people can reach out to you. And yeah, man, I appreciate you making the drive down.
Yeah, this has been fantastic. Thanks so much.
Thanks for tuning in to today's episode. Please make sure to share this episode far and wide. Help more people. I really appreciate you tuning in. I'll see you on the next one.